Good evening and welcome to the 11th session in Fundamental and Technical Analysis Training. So this week, it will be a continuation of what we discussed last week. Last week, we discussed about interpreting certain chart patterns. And today we are going to continue that session. So as always, we have Saliya who is an expert in technical analysis. He will be conducting the session. And anyone who is joining new, I highly recommend that you all go and follow up our previous training sessions conducted on fundamental and training analysis so that you have a smooth flow in learning this series. Saliya, over to you.
Thank you, Charitha, and warmly welcome all of you for this 11th session. And we will be talking about the double tops today. Last week, if you can remember, we were talking about, we spoke or we shared the double bottoms. And this series where we are talking of the patterns, on one side it will be interesting, but at the same time, it will take time for anybody to understand how to spot the chart pattern, and at the same time how to benefit out of it. Right, talking of the double top, right, that is the opposite of the double bottom. In the case of the double bottom, it's a continuation or a reversal, a bullish reversal pattern. At the same time, the double top is going to be a bearish reversal pattern. Double bottom is a bullish reversal pattern. Now, obviously, you got to spot the while you're, if we are going to be in the current, basically we need to understand, or rather we need to put these patterns into practice in the current or the present perspective. That is the idea behind everything. But then in order to master, we have to go back and revisit those patterns wherever we have seen that. That's very important. But as I said, the trick is to find out how those patterns are going to form in the current or the present period. So for an example, the reason as to why I have taken the line chart is mainly because when we study the patterns, you will notice that understanding the line chart as a, at the first instance, when we are studying the patterns, it will be important to figure the patterns by using the line chart because it's easy. Therefore, I'm using the line chart first, and then we will be moving, we will be turning the styles to either a bar chart or a candlestick chart. Now, this is the Expolanka, and a lot of people are familiar with the Expolanka's price action, and a lot of people might have benefited out of it. Now, the double top is when you have two higher points, and in between there is a valley, or there is a reversal low, right? And in between the two tops, you have a low, right? Meaning there is a rally like this. Then there is going to be a reversal. Once again, a rally. Then we are expecting another reversal to take place. So as and when you understand that there is a once a top is formed, when you see a reversal, a person who is looking at patterns need to be prepared for the next action, right? That is the most important benefit that you get out of the patterns. The moment you see a rally taking place, and then there is a reversal, there is a pause making a resistance, then it pulls back or reverses, and then when you see another low formed, right, then you will be waiting for the next events to take place. And in the case of the double tops, just like in order to explain and understand, you need to know that you have two sides for the double top, the left side and the right side, right? So in between you have this low, right? So when we come into the Expalanka chart in the current perspective, you can see that there is a small top here, right? Mind you, this is the line chart. In the line chart, the turning points, the reversals up and down happens on the closing price. So when you see that small point here, right, this is a closing which has turned the next day to be lower than this top point, right? So if you just turn into a bar chart, you will notice that now this is what we saw in the line chart. That is what I said. When you look at the bars and trying to understand, or looking at the candles and trying to understand, you will not spot that reversal, right? This reversal you will not see. Now, the other thing, we will be, in a minute, we will be going to the some other, to the past to understand how this is happening and what we need to expect when there is a formation of a double top. Now, once you see this left side of the double top is formed, meaning there is a top, then there is a reversal, right? You have to immediately make use of that low and make draw a line which is horizontal. It will be useful if you spot that, which is at 118, and format it, or go to the settings and to the coordinates and make it 118 on the price 1 and the price 2, so that it will be accurately visible like this. At the same time, we can even change the color. I'm sorry, I'm taking the low. I'm so sorry. I have to take the closing price, 119.75. This is one way of spotting the turns, the reversals. If you see in the candlestick chart, or if you are frequently using the candlestick chart, and if you figure out a low rather than a close as the most prominent turning point, then you can use that. And we need to understand, since I remembered it, I must tell you, whatever that I draw is mine, not yours. So if I'm not using my drawing, right, it doesn't serve any purpose. Therefore, we need to understand this. I may repeat over and over again, right? The way I interpret myself, my charts has to be different to another person's interpretation. Why? The reason is, right, then only there is going to be a perfect market. In a perfect market, there has to be an agreement to disagree. We need to agree to disagree, right? Therefore, that's why I just showed you, you can take the closing price as your turning points, or the lows and the highs as your turning points. But since, as I mentioned, since we are learning the patterns, it is easier for us to spot the pattern, pattern frames by using the line chart And there, since the line chart has the closing prices, I am taking this. Other thing, now once we come up with that area, right, the next thing that should happen is that now this is the current, or rather today's price, right? Today's closing is 123.50. This was yesterday's closing, which is at 19.75, right? Previous day's close was 121.25. That's why there is a low, right? 121.25. It went up to that level, or rather the close was that on that day, and thereafter it came down to 119.75 and closed, and today it closed at 123.50. Now this will be in action only when the price comes down below this 119.75 and continue to fall, right? Now that is the idea of the double top formation, right? That is what we are expecting to happen, right? Now other thing is, the horizontal line that we are drawing here is called the confirmation line, right? So this will be the confirmation line, right? This is going to be the confirmation line. This will be the left side. This is the R side, right side. Okay. Now, in the case of this pattern, we are expecting this final leg or final section of the R side to, come down and break below the confirmation line, right? What is the meaning of that? Now, as far as we are concerned, I mean, in the Sri Lankan market, we don't have the ability to short, right? So we don't have, we haven't got that facility as yet. But this will help us to understand whether the trend is reversing. Okay. Other thing is, we need to understand another important fact is that these patterns, always remember this, these patterns are short-lived. Right now, I'm using a day chart. As a result of that, these patterns you will see, for a short period, meaning it will come down, but just because it is coming down doesn't mean that the prices are going to just eternally come down from there onwards. That is not the idea here, right? We are looking at the reversal before, we are expecting a reversal to take place. If that reversal is not going to happen, then we know, okay, it's in a higher low formation, right? Those are the important things when you want to kind of, cultivate a thinking behind the technical or rather the price behavior. These are what we need to understand, right? At the same time, this will help you to become more humble. Why? We are not going to predict things until a confirmation takes place, right? If there is no confirmation, we don't get excited, right? But if there is going to be a confirmation, what happens is the trend is going to continue to come down for a certain, until such time that there is another reversal to the upside. Here it's a downside reversal, to the upside there can be a reversal, right? So other thing that we need to understand whenever you look at the patterns at the same time, when you're watching how the prices are unfolding, right, you need to understand that always there is an effect of a thing called a throwback or a retest, right? An effect of a throwback also known as retest. This will most of the time happen as and when the prices are, moving into the future. Okay, so here also what would have happened is that there is a retest. It went up to a certain level, threw back. That's why it came down here. Right now it's on its way up. But since there is a throwback here, we need to see whether it's going to come back again and retest this confirmation line and break down, making a reversal, right? Now, once that reversal takes place and the price is breaking down below the confirmation line, we can wait for the retesting of this line back again, meaning it goes up to test this or somewhere here. Sometimes it could even be something like it goes up here, then coming down further. That also can happen, right? Or otherwise, it will be something like it can like move up a little bit and then comes down, right? So these are the scenarios, or otherwise it can just test there and come down, right? So when we are in the case of shorting, right, what they do is, or if you have been practicing forex trading or cryptocurrency trading, you would have noticed that there are two ways of moving into a sell order, a short order, by using this formation. What we do is, when we are here, right, we will be putting a sell stop order at this level of 119.75, or it can be a little below 119.75. We put a sell stop order, right? Or otherwise, when this is going to go up, right, then we will be putting rather when it moves up, and when we get the indication, the next signal that this is going to fall, we will be entering a normal sell order, right? That is how we make use of this if we are shorting. Sometimes you can, there may be a time where you might think of selling your own stock and buying back again at a lower price, right? That also can happen, and for that you might be able to make use of that strategy when make use of that strategy and benefit out of it, right? But the conditions you need to know, it will be that if this is not going to take place, right, this leg is not going to happen, and if the price is going to come, throw back again, retest this confirmation line and move up further, right, then what happens? There is no double top pattern, or rather a double top confirmed pattern available in that. At the same time, thereafter it's a trend continuation rather than becoming a trend reversal, right? So that's basically what this chart pattern is telling you all about. The most important thing that we need to understand by using the double top pattern is the reversal, right? A lot of, in Sri Lanka, or rather in the Colombo Stock Exchange, we don't mostly make use of this pattern to execute a sell order. But if you are in the habit of, allowing the profits to run, and then if you're convinced that at a certain point, it's worth even taking a partial profit out by, selling, double top pattern will be useful for you. Okay, so while we are in the same pattern, let's train our eye these patterns, or rather the formations in the X-Lanka chart, right? You can now see that there is a double top formation here. Now remember, I have given the two tops almost on the horizontally equal levels, but that does not necessarily be the same always. Just like in the case of the double bottom chart pattern, right? In the case of the double top chart pattern also, you may not see the same formation. At the same time, it will not be the same M formation, right? Now, if you look at this double top formation, where the L is this, and the R is this, right? You can see that distances are different. Other thing is, now when you're explaining to yourself what is going on, right? What we used to explain to us is that there is a high here, then there is a reversal, then this high was broken out and another high was formed. In fact, this is a closing high, then comes down to a closing low, and it moves up to a closing high, higher than this. So you have a higher high formation. Remember, in that interpretation of a uptrend, we always memorize and keep on muttering that the trend has higher lows and higher highs. So you have higher lows here, and also higher highs. Then you end up here by having another high and a higher high here, right? After this final higher high, you can see that there is a reversal. The moment you see a reversal here after the pause at the left point, it reverses at this level. We are going to use this line and put a horizontal line at that point. Now this is the closing price at 50 rupees. So 50 rupees, right? So 50 rupees is what we are going to type here, right? So at 50 rupees. Then what we are going to now look at will be this price breakout below the 50 rupee mark. So basically it came down and closed below. Then there is a throwback effect, as I mentioned. Then it comes down, then again tries to go above 50 rupees. Then it fails. And as a result of that, this double top formation expectation that we were having was fulfilled. Now, the next thing that we need to understand is the projection, right? Now, what we do is we draw another line by using this top and this top. Now, in this case, we are using this top and this top. Thereafter, we will be making use of the low, or rather this horizontal line, which is the confirmation line, that value, and make a vertical line up to the up to a point where we believe is the highest point in between the left and the R line. It shouldn't be the highest point here, but in the middle, right, where the 50 rupee low is meeting, right, and that is the level that we will be using. And there again, you know, you can use whatever that you feel fit, right? There is no hard and fast rule as far as your projection is concerned, right? But you have to have a consistent approach to the projection, right? So this is the distance that we will be looking at. This is the distance, right? So when we see that the prices, when we see that, now first thing is we figure out the left side, then there is a pullback, makes a low, then we draw the confirmation line, then we wait for this reversal to take place, reversal into a rally, then again a pullback is happening. Then we have two tops here. So you already, by using the two tops, you don't need to wait until all these things happen. You are prepared to project it, right? So what we do is, this distance that we have drawn is going to be cloned in like this, and take that level and drop it on top of the horizontal line like that. Now, this is the area that it can come down to. That means that the value is something like 4150. It's over here, 4170. We draw another horizontal line. Right. So we can see that eventually it came down and tested, and in fact, you know, the prices broke below the 4170 and then only turned, right? So if we are not using this to our benefit by selling and waiting until the projection happens, and then we execute another strategy in order to accumulate once again, right? If we are not making use of it with a sell order, we can always wait for this reversal to take place, right? And then understand that the we can come in and accumulate, or otherwise we can understand, okay, now we at this level we will be able to understand whether the prices are going to once again reverse to the upside and start slowly rallying. So here you can see that the left leg is like this, right? And the low is like this. And the right side is going to be like this. The right leg, in fact, happened at this point. So it's not that perfect end, but that is how it happens. At the same time, you need to understand that for all these things to happen, right, takes time. What does that give? What is the message that is giving you, right? We need to wait. Like in the jungle, sometimes you call it the law of the jungle, right? Until whichever the animal, right? Until it achieves the fortunes of catching the prey, he will wait, right? That is one of the important kind of culture, attitude, technical analysis is going to teach you to wait until your target is hit, right? With open-mindedness. Because if you were a person who would use this this pattern in order to sell, so that you will be able to buy back, right? You would have sold at this level, or you would have waited until a throwback happens and then you would have sold here, right? But for it to come down, it took further time. So just because, I mean, that is why looking at a pattern doesn't mean that the pattern happens exactly the same way, right? And that will be very important going forward by looking at these charts. So this is what happened to Expo Lanka on a daily chart. I'm going to go ahead and pick up another chart that I was tracking on the weekly, which is the JKH. Right, let's take these out. This had been in 2013, between 2012, or rather 2011 and 2013. This is in 2010, sorry, 2010 top, and this is 2013 top in a weekly chart, right? You have this top, and you have this top. Then you have the low, bottom in that valley. These are the 3 points that we want in this pattern. We join the two tops, then we make use of the point of the low and take it up exactly to the straight line to join the line that we have used to connect the 2 points of the tops. Now this is the projected area. Now before doing that, we will be having the horizontal line, right? And that the value for that I will be giving is the closing price of January 9th, 2012, which is at 139.75. 139.75. Okay. So the target is going to be this distance. We're going to clone it and bring it down to the top of the horizontal line like that. Then we figure out where that could be. It's at 37.23. $37.23. Right. Over here, we know, okay, it didn't come down to that level, right? But when we are using the message that I wanted to share with you is that when we make use of the patterns and the projections, we have the confirmation line, and incidentally, that's a support line. So automatically, you're using a support line, you're drawing a support line and watching that support line, right? You can see that when the breakout took place, it was here. This is 139.75. So it came down. Oh, give me a second. Why is it so awkward? Sorry. Right. So you can see that this support, which was in 2012, right, was broken, and the prices came down below that at this level, right? So when you are analyzing, that's why we say technical analysis. When we are analyzing, we are not only just analyzing things where you buy so that it will go up and you sell, right? That is not the base. That is not the reason as to why we make use of these patterns. That is not the reason as to why we make use of these lines to understand what is going on. It's all to do with support and resistance levels, the projections, whether the projections are going to be executed or realized, or otherwise. These levels will help us in order to understand whether we are going to come in and start collecting, and if not, right, this will give you different or lot of messages, right? It will vary from person to person, but that will give you a lot of messages. At the same time, when you're just while looking at this, you will see many other tops, right? You have a top here. Before that top, you can see that there is a horizontal, there is a low here. So you can just draw another low there, horizontal line by using that low, and that low is at 182.68. Sorry, 170.01. 178.0. Sorry, 78.01. Right, from here, if you join these two lines, right, I'm going to leave it at that level because, when in our next session, we will be looking at what these, how we are going to use these lines by using these or joining these tops, right? So in the case of the projection, we will be making use of a vertical line by connecting that low and go straight up to connect the line connecting the 2 points. Clone it and bring it down to this level and figure out that value. It's at 110.80. Let's say 110.80. 100. Yeah, we go with 110.80. Okay. So based on this projection, which was the low by using the low on the in September 2013. This low was recorded in 2013 September, right? And we projected this line at 110.80, and we can see by the by March of 2020, this projection was fulfilled, right? It was achieved, right? So this is a simple a chart pattern, right? But it's an effective chart pattern if you master it. When you are mastering it, you have to just you can make use of any amount of charts, right? Now I'm going to remove all these drawing tools and go to a 1 hour chart. Right now, this is a weekly chart. No point using the monthly chart because sometimes you may not get a lot of data. Therefore, we are going to make use of the 1 hour chart. Right, in the 1 hour chart also, you will see a lot of informations. By now, you could have figured out many informations. You have here a top, then you have here a top. Then you have, now let's go in order. You have that top, then the price comes down, makes a bottom there. Then there's a rally making another top. And before this, we can make use of this bottom and draw our horizontal line at 138.75. Okay, right. Then we will immediately look at the distance between the 2 points and the low, like so. Clone it. Clone it like this and drop it and figure out where I can come down. So basically, these are short time period or short time frames, charts of short time frames, and you can see that those are hit more frequently in hours compared to the weekly charts, right? $130, $136.80. Okay, so that is in the hourly chart. Then let's look at or train our eyes by using the candlestick charts. Now remember, these are all closing prices. In the case of the candlestick chart, you can either use the closing price or the high and the low, right? It all depends on how you visually spot with these those points, those top points, right? Now here, as I mentioned, it is very easy to spot the 2 points here, but in the case of the line chart, they used only the top of the bodies of these 2 candles, right? So we have this level and this top, and you have this. You can make use of this low, or even you can make use of this low. This is a closing low. This is the low based on the low price, right? That is how you make use of these points, right? Points, the price points for us to make to figure out the pattern. If we are using this point, then from here only we will be drawing a vertical straight line up to the other line. Right? So we are taking this and dropping out here, and again drawing a horizontal line at that point. So you can see that just like in the line chart, projection was achieved, right? So now if you now in the same hourly chart, right, you can always basically what we do is we spot the beginning of a rally and ending of the rally. Then we know this is the beginning, this is the end, right? You need to master this, because I mean, in order to master this, you cannot draw in an empty space like this, right? You have to figure your own levels. See, like here, you have a low here, you connect that low to this high. That's one wave, right? Then from this high to another low. The low means it could be this or this. Since this is the lowest low, we have to take that, right? And then from there, we go to the next high. And it is here. This will tell you another very important fact, right? What is that? The distances of these waves are different. Distances of the waves are different, right? So whenever, these are very important. As time goes on, you will understand why those are important, right? You need to keep training yourselves by just drawing, take one high point and go to the lowest point here. It can be this or it can be this, right? Just keep training them, because these are used for many patterns and many other, especially things like Fibonacci extension lines and Fibonacci retracement lines to count waves, right? We need these. We need to understand the mechanism or the reality behind the waves, right? At the moment, JKH in the hourly chart, you see that there is a low here and there is a high here. That high is equal to this high. Therefore, we can take this high. If this high was higher, then we will be taking that high, right? That is just to keep educating ourselves, right? So that is regarding, the identification of the waves, because identifying the waves are very important for patterns. Right? There are two questions. Let's see. Can you say about MELS and CLC price? Okay, can you please explain as to how to understand the double top formation? Right, let me go through that again. Then how do you decide on the place to drop the vertical line you draw? Fine. first of all, about the males and CFC, let's come back in a while. About the explanation, again, I must say, now let's take all these drawings out. Right. So by now, I told you that you need to figure out the tops, right? You have two tops. This is the first top. This is the second top. Before the second top, you will see the low comes down and makes a low, right? So for now, I use this low. So we need to understand why this is a top, why this is a top. Now, this is a candlestick chart. Earlier, I can remember talking about the swing highs and swing lows. And there I explained that for a swing high, there are three candles. One is this candle where the high is here. The next high is this, right? So that high is higher than this high. Then the next high is this. This high is lower than this high. So for a swing high, you need a high, then a higher high, then a lower high. Then you have a swing high, right? So you spot the high here. Then there is another swing high here. Why this is the swing high? You see the high here, this high, which is not a a candle with a body, but that's also a candle which is called a doji, one of the doji candles. We will be explaining the candlestick formations again. I think we were talking about it earlier on, but candlestick patterns we will be talking about. And when we look at the candlestick patterns, we will be talking about all these, interpretations of candles. This is one high. This is the other high, which is higher high. And this is the higher low. You have a high, higher high, and a higher low. Therefore, this is the swing high, right? So you spot the swing highs, then also preferably swing lows, right? So here you have a swing low. Quite strangely, this swing low, you need to understand that swing low comprises of three candles, right? You have the fourth candle here, but you can see that the fourth candle is above this low, right? So you make use of these three candles and make use of this, the standing out shadow and make that or treat that as a swing low, right? So you have, then I showed you how to draw or make use of the lows and the highs to find the waves, this low to this high. Then I said there are distances in in the ranges, in the waves, right? Now from here to this. Then you have another wave from this low to this high. Then you have another, from here you can draw up to here, right? So this is the double top formation. But the process, once again, let me go through the process. Once you figure out this high, which is the left high, once again, let me show you the left high. Then you wait for the low. When you see this low, and when you see, when you spot this low and you treat that as the swing low, right? And then there is another wave that has started. You don't need to wait until this swing high is formed, right? You can use the bottom of this wick. Incidentally, that is at 139.75. Draw a horizontal line, make it 139.75. Right? And then once we, sorry, the low is, sorry, low of it is 130.50. $138.50, $138.50. That's the low. Once that is spotted and we have marked it there, then it goes up, making the right high. Okay. Then the prices after that swing high comes down. And so basically, what happens is, when we are drawing this line, we don't know what is going to happen to this wave and this wave. We don't know that. We wait until this line, is met by the price. And we see, okay, if it comes down or whether it's going to turn into another up wave above that line, which is called the confirmation line. Right? At the same time, you will not always see, a very, visible pointed, I would say a reversed V-shape formation like this always, right? You might see, a V-shape form, a reverse V-shape form like this. At the same time, some candles in the top, which is not only where could be one prominent candle show you the high, like what we see here. Now here you can see that there is a candle here which is prominent. It's like standing out. But within that range, you have some other candles. Here also you might see something like that, right? So like something like this. You will see something like, a candles like that, and a pointed or on the dot high on top of a shadow like this. Right? So that kind of formations also will be there, which is known as, earlier last week we mentioned about this Adam and Adam and Eve and Eve, or Adam and Eve or Eve and Adam. Meaning Adam means when you see a pointed reversed V-shape formation, that's called the Adam, right? Just for our explanation, the chart analysts have described it that way, right? And if you see something like this, where there is a rounded shape, is called the Eve, right? Now in this case, this is called an Adam and Adam top, because you don't see those rounded shapes. This is a straightforward Adam and Adam double top pattern, right? So now the confirmation is done. It breaks, then throws up. I remember I said retesting, throwing back. So this has happened. Then came back again, right? And made a lower low, meaning this low is lower than this. It gives you a further confirmation that the prices are falling. Now here, after the reversal, it didn't go up to break either this or this. It came down. When it came down, you can see that this area was broken down. The prices got rejected or pierced through this area, came down, right? And then we can see that it went up to break this level, but couldn't go up and break either this level or this level. In fact, it went and tested this high of 141 rupees. Here also it's 141 rupees, right? So you understand when the prices are going up. Remember, might have been boring when we used to repeating and muttering higher lows and higher highs. But this is what we are talking about, right? You see, it's like, somebody is telling inside the market that you should go to 141 and stop. But in reality, it won't happen like that. None of the traders or investors will ever, keep planning while the trading is going on. But for some strange reason, you can see that this goes up to 141 and comes down, right? When it comes down, you can see that this low is higher than this. But again, when it went up towards this confirmation line, it refused to stay and break above that. So the prices are falling, right? So if we go for a projection here, where we are connecting the left high and the right high, right? And then, then we make use of this low. And correct it to here. Then what we do is that there's another question, how to draw that, to bring it to the confirmation line and below the confirmation line. What we do is we go to that line, click on it, then you get the bar, right? And you go to the, you click on the down arrow here, where it says clone, copy, and stop syncing. We go to the clone. Then you will see another new vertical line is created. You click on that and bring it down where the top of that line is on top of the confirmation line. Hope that was clear. Then we check this price area, that's about 135.28, that means 135.30. In the present market, you don't have 135.30, so we'll take it as 135.25. And we do a horizontal line, change it to 135.25. And you can see that eventually it came and tested that. Then we can see that it was broken out and the prices kept coming down below. Now it's on its way to test, or rather the prices are on its way to test the 135.25 resistance line, right? So that's how we look at, that's how we spot the double top, the confirmation line, then the projection, and see whether the projection is met. Right, so all in all, what it means is that you have a long, you get a lot of information inside one pattern, right? That is the key for learning the charts and the message that is given. You can see that there are many stories told to yourself when you look at the chart patterns, right? Then Really appreciate, really appreciate it if you let me know where I can find the rest of sessions. You can go to FB, YouTube, and click on SC Securities, and you can see all the sessions, all the 10 sessions. Now, this is 11th session that this is also will be uploaded. All are there. Then let's see. So Mr. Panabuke asked, how do you decide on the place to drop the vertical line? I showed that now. Hope it was clear. Otherwise, you can just chat to us. So finally, talking about Melstar and CLC price. We must mention the CLC. CLC, I think there is only not even 0.5% of the free float in the market. Maybe repeat, not even 0.5% is the free float available in the stock market, right? 99.5 or little over 99.5% of the shares are with the owner. That's why it is easy for whoever wants to just play football with the share can do. So if somebody wants to play football with a share, right, we don't recommend. But if you know the risk involved, because you can just burn whatever that you put into a counter like that. Still, if you want to trade, CLC is this, right? Commercial leasing. This is the 1 hour chart. I'm just going through the 1 hour chart because over here you can see that these are all 19th to about 23rd price action, this point. So it has gone up to this level. It's trying to find some support at this area. But remember this candle, you can see the prices have fallen right up to 2670. Then it went up and closed at 3150. So what does that mean? Here, this is on the probably the second hour, right? Second hour into trading today, it went to a high of 3880, right? But it didn't, that even that 1 hour, we can see it came and closed at 3510 after hitting a low of 3310. It opens at 3750, goes to 3880, makes a low at 3310, and then closes at 3510. The next hour, the last hour, right, it opens at 3490, lower than the close of 3510. Then it comes down right down to 2670. It comes right down to 2670, closes at 3150, right? So this is very risky. If you want to buy, okay, if it goes sideways like what we see here, then you can have some hope. Or otherwise, if the selling is going to persist, then there can be, okay, best case scenario I would say is between tomorrow to trade between 2670 and 3490 or 35 rupees, right? 2670 to 35 rupees, the best case scenario, right? That is the best case scenario. So we'll see whether that best case scenario is going to happen tomorrow. This is a playing football game, just like that NIFL. I think NIFL has much lower free float than CLC. That is the very reason as to why LOFC cannot be played, because there I think they have more than 5% free float. So you have to just put in a lot of money, right? You can't control. But when it comes to tiny amounts of shares available in the market, right? A lot of people can get together and just play football. That's why I said, to play football, you have to have a small team, no? 11 in each side, 22 people. You can play football. Melstar, finally, this is the last thing since you all asked. Melstar again, watch this candle. The distance of this candle is between 51.30 and 53.50, right? So let me highlight that. The simple expectation, if you want to have, best case scenario is that the prices to trade between let's change this, between this low of 51.30 and the high of 53.50, right? If somebody believes in this share, he's really confident in this share, can collect at that in this range. But if you're a trader, you have to make a decision to stop loss if it is going to come down below 51.30, because the idea here is that once the 53.50 is broken, it can go and test the previous levels at least. Right now here, it's 53 rupees. Today it went and tested 53.50. So we tried to go above 53 rupees. Here also 52 rupees. So now it's trying to go above the high prices that we saw here, this area. Okay. So the next level will be above that. That's there's a high here at 54 rupees. Then there's a high here at 58 rupees. So you can say between 54 and 58 rupees, the prices can go up if this 53.50 is broken and the prices start extending further. That's on Melstar. Right. Finally, okay, the products. Right. In the case of dip products, you can see this top. This top is at 60 rupees and 60 cents. Before that, this top, which is at 61.90. So 60.60 to 61.90. What happened here? That is yesterday. Went up to 62. So that 60.60, 61.90 all were tested, and whoever wanted to sell at those levels managed to sell. Right, so that is known as a resistance. This area is the resistance, right? That means this level to at least that level, this area. So you stretch it, you can see that that is the area that the prices went and tested. So basically it went up to 62 rupees. Now you can see it is very important that we understand the importance of a range, meaning this low to this high, this low to high. At for all the candles, you have the low to the high range. You can see this candle was trading inside that range. Just for a few minutes, it came down below the low of 57.60 because it came down to 57.50. But otherwise, it stayed there. But unfortunately, closed lower. It opened high, closed low. Right? So that is opening up the range between this low, which is at 54.50, to this area of 58.20. Right? So basically, you have to watch this area. Whether the prices are going to come down. What will happen is, in fairness to the counter, you might see, support building at this area. That is the best case scenario, right? The excellent scenario will be that the prices are going to just go sideways over here, then break out and go up. So with that, we took a little bit extra time as well, but thanks for your interest. And let me hand over to Charitha.
Right. Thank you, Saliya. So this is the 11th session, and this is we have discussed about I'm sorry, yeah, this is the 11th session, and we have discussed about chart patterns for the second consecutive week. So thank you for joining, and if you have any queries, you can always send it in to us. And anyone who wants to follow our previous sessions, you can always do so. You can log into our YouTube channel, SC Securities Limited, and all our recordings are available.